Discussion here on real estate and the Ontario market. So much has happened in the last week, especially with the Bank of Canada this past Wednesday, June the 1st, raising interest rates again by 50 basis points or 0.50%. And I'm going to take you through what that means, also what is happening with GDP in terms of growth in Canada, and what Bank of Canada said after already raised interest rates this week, which is that they're looking to see how they can tame inflation and what they have to do necessarily to control it. And obviously these increases in interest rates are affecting house prices, so if you're a buyer or seller, so you definitely want to stick around, as I'm going to show you what this means in terms of home sales in Toronto and the GTA, and a bit of the numbers of what we've seen from the peak of February 2022. So definitely prices have adjusted, buyers have more options, sellers are obviously piling in, and there's less buyers for those homes. And I'm going to take you through all that information. It's just been such a huge week, and I'm very excited to bring this to you. So I hope you've been doing well and staying safe. Again, this is not financial advice. I am a wealth management advisor. I spend my day in, day out researching, helping clients, and working with others. And I spend a lot of my personal time researching this. So if you're looking for advice, I always say reach out to your trusted advisor, someone you trust, someone you can work with. And if you have any questions for me, do leave them in the comments below, or you can always reach out to me directly on Instagram and Twitter, and I'll definitely have my handles there in the description. So why don't we kick it off here? As you can see from the title of this article, this is an article from Yahoo Finance on June the 1st. Bank of Canada hikes key rate by 50 basis points for the second time in a row. So again, they raised it in April, and now they raised it in June by 50 basis points. The Bank of Canada raises benchmark interest rate by 50 basis points on Wednesday. And again, as I was saying, this is the second consecutive outsized hike as the central bank's trying to tame the inflation, as you've probably seen every day when you're purchasing items, obviously with the price of gas. And what they mean by outsized is usually the Bank of Canada, or usually most central banks, raise it by 0.25%. 50 basis points is not something that's seen very often, and it's not seen in 20 years at least in Canada. So that brings their overnight rate at 1.5%. The Bank of Canada also warned more hikes are to come, saying on Wednesday that it's prepared to act more forcefully if needed and to meet its commitment to achieve the 2% inflation target. I've said this many times in my past videos. One of the key objectives for the Bank of Canada and most central banks is inflation. Inflation in Canada is right now 6.8%, and obviously they need to get a handle on this before things get even worse. Just a little bit more commentary here from some of the banks. Economists widely expect the Bank of Canada will hike its overnight interest rate by another 50 basis points in July, so definitely be prepared for that. But the strong language in Wednesday's release raises the question of further aggressive hikes, and what that means is, this is a comment from Douglas Porter, chief economist at BMO Capital Markets, said the central bank's overall tone is above and beyond hawkish. What he's saying there is, they're really focused on increasing interest rates. All they care really about right now is taming inflation, and they're going to do whatever that means necessary in terms of taking interest rates much higher. And I'm definitely going to be touching on that, what they said further this week. They seem to give a bit of a hint that while everyone's expecting a 50 basis point at the next meeting in July, they could be leaning towards something even more, he said. And more than 50 basis point is probably about 0.75%. We heard that. We heard Bank of Canada say, probably not, but who knows? Inflation is still running very hot, and we'll see what inflation comes out very soon for the month of May, and that's going to be a very telling sign. And lastly, here from this article, if not more than 50 basis point at the July meeting, then 50 basis point at the meeting beyond July. So overall, I get the sense that the bank's concern is mounting. Clearly, they underestimated inflation even as recently as their past meeting, and they're basically trying to play catch up for that lost time. So they're going to hear more and more about this, and this continues on the heels of the Bank of Canada, where GDP growth has slowed in Canada. Usually when GDP growth is slowing, you don't see that aggressiveness from interest rates, but again, we're not talking about GDP. The Bank of Canada's focused on inflation, and I just want to touch up a little bit or share a little bit information here with you. So economists say the Bank of Canada is still on track for an oversized rate hike on Wednesday. Again, this is an article, Yahoo Finance, from May 31st, just a day before. On track hike on Wednesday after the latest Statistics Canada showed the pace of economic growth slowed in the first quarter. We got here the unexpected weakness in the first quarter GDP growth was principally due to downward revision to the January data, which now obviously shows a decline as Omicron, and obviously when we got the Ukraine and Russia conflict here. However, just a few comments. He said the real economy remains on strong footing, which means the Bank of Canada can press ahead with raising its key interest rate by 0.5 percentage point. And obviously we saw that. And here's the inflation information here if you're curious. The annual inflation rate hit 6.8% in April, its highest level since January 1991. Please take that in. It's been a very long time since we've seen inflation at this number. Well, the Bank of Canada has a target of 2% for the annual rate. And on those heels, as we move forward, this is an article from Reuters. This is June 2nd. Bank of Canada says rates may have to double to fend off galloping inflation. So as I've been saying, the Bank of Canada is very concerned. We're seeing this from obviously what they're saying in terms of their verbiage and what they're sharing with the public, and also the experts, what they're saying. So I'm going to read a little bit about you, and I'll kind of explain what this means. The Bank of Canada will probably have to raise its policy rate to the top of its neutral range. Its neutral range is 2 to 3%. And these are, what is it here? Double its current level and go higher to prevent soaring inflation from becoming entrenched. And this is from Deputy Governor said on Thursday. Paul Beardor, speaking to the business audience in the Ottawa area, said the central bank was considering the pace at which it moves from neutral, and neutral is 2 to 3% range, where interest rates neither stimulate nor weigh on growth, along with how high rates can go. It is probable that we'll have to go on the top of the range. So when they're talking about 2 to 3%, they're overnight. They're thinking about they're going to be closer to 3%. Again, the central bank on Wednesday raised its key policy rate to 1.5% from 1% previously. When asked by reporters if more forcefully included a one-off hike larger than 50 basis points, Badri said the central bank wanted to get in neutral as quickly as possible. So with that aggressiveness, that pace, they're going to continue. At least from the comments is what the sense we're getting in the market. So that could continue involved in more moves in a row, or it could be bigger moves, he said. And again here, April, Canada's inflation hit 6.8%, 31-year high, and obviously that's on the top of mind of central banks. So the takeaway from all this information is, yes, we're expecting another hike in July, most likely 50 basis points, could be much more. And overall, for the rest of 2022, interest rates are going to continue to change. If you're not comfortable with that in terms of a mortgage, lock in and fix. But again, just be aware you're going to lock in at the high end. Because right now we're between, let's say, between 4.25 and 4.75% for 5-year fixed. You could look at variable, but variable, has a certain level of uncomfort for certain individuals that can handle those increases, and we know we're going to see more interest rate increases. So again, if you're curious, reach out to your investment or your advisor, or let me know if you have any questions. I'd love to, chime in and share my perspective as well. As we're seeing interest rates increase, what we're seeing is house prices adjust, along with most other assets, financial assets, stock market, crypto, obviously, and many more other financial assets. So let's kick it off with this article. This is from June the 3rd. And from Bloomberg, Toronto home prices slide for the third month on higher rates. Toronto home prices fell for the third straight month as rising interest rates spur an abrupt reversal in a city recently at the heart of the world's hottest housing market. The average selling price for a home in Canada's largest city fell 3.1% in May to 1.18 million on a seasonally adjusted basis, and this is according to data from Friday from the Toronto Regional Real Estate Board. And Toronto hasn't seen 3 consecutive months of price decline since early 2019. So that tells you how the market has obviously changed from 2020 and especially 2021. Prices have now declined nearly 9% from their February peak, though they're still higher than a year ago. Until recently, Canada has some of the fastest home price increases, with Toronto and smaller communities in the province of Ontario leading the way as buyers took advantage of low rates and obviously sought that space with working remotely. And obviously that's changing if you're experiencing a hybrid or being called back into the office more often on a weekly basis. And also for buyers, there's a psychological aspect where potential buyers are waiting for a bottom price. And this is again from Kevin Kreger, the Toronto Real Estate Board's president, and this will likely continue through the summer. As a buyer, you're probably thinking, okay, prices probably can go a bit lower. I'll wait, and I'll obviously wait to see what happens with interest rates, and then make a move. And then obviously at the same time, meanwhile, sellers obviously keep piling in. The number of homes for sale in the city jumped 26% last month from May 2021. That combination has allowed the remaining buyers to be choosier, and properties are staying on the market slightly longer, obviously compared to last year. So again, buyers are taking a step back, watching real estate, the prices and watching interest rates, and obviously sellers want to sell. Investors and obviously people looking to move into their next home. As a last piece, I wanted to show you just some data here on what we're seeing in terms of house prices by region. So this is a bit of commentary from Avid Commentator. Seems like an Aussie journalist, but again, he's reporting on some Toronto numbers here and chart from Reuters. Greater Toronto housing prices between February and the end of April down 8.9%. And then obviously depends on the region, right? So median home prices in Toronto suburbs skyrocketed during the pandemic. Now suburban prices are plunging even as values continue to inch up within the city core. We can see here, this is the numbers, and we'll obviously look at the declines here from February 2022 to April 2022. We can see Durham with minus 15%, Dufferin with minus 22%, Halton with minus 12%, PO minus 10%, York Region at minus 9.6%, Greater Toronto at minus 8.9%, and City of Toronto has still held up quite well in terms of pricing. There's still strong demand in Toronto because Toronto we're going to see the last to go in terms of correction. Suburbs and then down feeding into Toronto. So guys, I hope you appreciated me coming at you on a weekly basis. Again, any comments, any questions, please leave them below. All these articles will be in the description. If you comment, will be appreciated. If you subscribe, I always appreciate that as well. And again, the three things I want you to take away from here is Bank of Canada has raised interest rates. They're going to continue raising them in July 2022. The second part is they're going to continue this forceful act for the rest of 2022, and we'll see in 2023. And that's because of inflation. If you see inflation changing, and what I mean by changing is number going lower, maybe the Bank of Canada will reassess, but again, that depends on when that happens. And the third thing is prices have adjusted. How long they're going to adjust for, what percentage they're going to adjust for, only time will tell. But again, when interest rates go up, usually house prices and financial assets prices come down. So I hope you appreciated this. Again, I hope you enjoying the great weather and stay safe. Again, any questions, please let me know. Have a great rest of your day. Thank you for watching.